Ola Electric's debut on the stock market was anything but dull. After a modest start, the shares revved up and hit the 20% upper circuit limit, closing at 91.2 on the exchanges, up from the debut price of just 76. So if you are holding Ola Electric shares from the IPO, the big question is, what should you do now? Should you buy more, hold on, or cash out and book some profits? Experts over here are divided. If you were in it for the quick listing gains, many are suggesting that now might be the time to take some profits out. But if you are eyeing the long game, Ola Electric could be a solid bet. The company's IPO performance was better than expected despite a large float. However, there's a word of caution. Remember the recent listings of new age companies like Zomato, Nykaa and Paytm? Their stocks initially soared but later faced significant declines. This now serves as a reminder that post-IPO performance can be unpredictable, and a clear path to profitability is crucial for long-term investor confidence. Ola Electric, which leads India's electric scooter market, has shown impressive growth. In the fiscal year 23-24, scooter sales surged 2.1 times, reaching 330,000 units. This boom nearly doubled the company's revenue to 5,010 crore rupees. Even though Ola Electric hasn't yet turned a profit, it's managed to trim its operating loss to 1,040 crore from 1,197 crore in the previous year. Government incentives for automobile production and cell manufacturing have also played a significant role in its growth. The company is investing heavily to keep the momentum going, with capital expenditure climbing from 887 crores back in 21-22 to 1,213 crores back in 23-24. But there's a catch. Ola Electric's revenue is heavily reliant on just two e-scooters, the Ola S1 Pro Gen 1 and the Gen 2, which makes up nearly 60% of its operational revenue. This concentration could be a risk. Furthermore, before the listing, Ola Electric's market cap to revenue ratio stood at 6.7 times, which is significantly higher compared to established players like TVS Motor at 3 times and Hero MotoCorp at 2.9 times. This raises concerns about whether the stock is overvalued. Now, despite these potential red flags, Ola Electric commands a strong position in India's electric two-wheeler market, holding a 35% market share. In comparison, TVS Motor has 19.3%, Bajaj Auto 11.3% and Hero MotoCorp just 1.9%. So should you hang on to your shares or cash out? It depends on what your investment strategy is. If you are in it for the long haul and believe in Ola Electric's growth potential, holding on might be the way to go. But if you are looking for short-term gains, it might be time to consider booking some profits.